But the markets, I think, initially sold off because if the Fed took those words out, well, maybe that's an acknowledgement that they're not making progress. And if they're not making progress getting to 2%, well, then they can't cut rates in March or any month thereafter. Maybe it means they'd have to hike rates. So I think there was a little nervousness about that. I think that Powell was able to calm the markets by walking it back. Now, I don't know if it was intentional or not. One of the questions he got during the press conference was about that. One of the reporters, I can't remember which one, asked him, what the Fed meant, what the FOMC meant by the removal of those words. Did they mean that they no longer believe that the Fed is making progress at returning inflation to 2%? And Powell said, no, it doesn't mean that at all. He said, don't read anything into it. Powell said that we just wanted to make the sentence shorter. So we took those words off, which doesn't make any sense to me because I know that they are very careful in the selection of these words because they know that everybody is, looking through these words, they just came down, from Mount Sinai and they were written by the finger of God. So they're very careful about what they say. And I don't believe that they were just trying to be more economical with their wording and they try to just, get rid of some unnecessary words. So I think maybe there was some meaning there. Maybe it is a bit of a acknowledgement, even maybe a Freudian one, that they're really not making the progress that they claim. But I think Powell walked that back. I think he understood that. Maybe he looked at the markets reaction and said, I got to do some damage control. So he said, pay no attention to what we wrote because we didn't mean anything by it. But I think there is some meaning there that maybe the Fed knows that they're not making as much progress as they claimed, but that's the last thing that they want to communicate to the market. So maybe they regret making that change. But in any event, I think the markets, listened to what Powell said. And, we saw a rally in the market and so very little impact today on the market from the Fed decision. I want to talk, though, about some of the questions and the answers that Powell made. First of all, the very first question he got was from Steve Leisman of CNBC, and it related to something I talked about on the podcast, which was President Trump's statement that he made in his speech at the Davos conference, and I talked about that, where he said that he would demand that the Fed cut rates right away. And so Steve Leisman asked Powell, did Trump contact you? Did he make any demands? Did he demand that you cut interest rates immediately? And, of course, that was really an unfair question to both Powell and actually Trump, because to be honest, what Trump said was that he expects the price of oil to drop sharply. And as a result of that big drop in oil prices, he would demand that the Fed cut rates immediately. So that hasn't happened yet. I mean, oil prices have come down from the high they hit a week or two ago, but they're still, $72, $73 a barrel. That's not the type of price drop that Trump spoke about, which would result in demanding that Powell cut interest rates. So he didn't say that he was going to demand that Powell cut rates right away. He predicated that on a big drop in oil prices. So the whole question was unfair. But also, did Leisman really expect Powell to answer that question? Because if I was Powell, if I had a private conversation with the president, I'm not going to tell everybody what he told me. I mean, then he's never going to confide in me again. I mean, if you have a private conversation, you shouldn't ask, hey, what did the president tell you in confidence in private? I mean, you're not going to say. So even if, there was a conversation, it makes sense that he's not going to tell the whole world about a conversation that took place in private. But Leisman had like a 3-part question, because he also asked him, how would you respond or how would you react if the president demanded stuff? And of course, it's a hypothetical, but he could have answered that. He could have said, look, we don't care what he says. He can pound the table all he wants, right? I'm going to ignore it. But he basically just refused to answer the question and left it at that. But the idea is that, look, we're apolitical, which, of course, they're not. They're not apolitical because he was asked, another question he was asked was to comment on the tariffs and, the policy that is being considered and what impact that might have on their mandate on inflation. And he says, well, we're not going to talk about it. We're not going to comment on that. He said, the people elected their representatives, and they hope their representatives are going to pursue policies that will benefit the country. And, we're just not going to, comment. That's not any of our business, which, of course, is nonsense. If the Fed chairman believes that a particular policy, regardless of its popular support, if a Fed chairman or the whole FOMC, for that matter, if they believe that a particular policy is harmful to the economy, if they believe it actually complicates their mandate, if they believe that it is inflationary, then absolutely the Fed has a duty to speak up. They're not there to remain silent. That's not why they're apolitical, right? Being apolitical, and I've said this many times on this podcast, it doesn't mean not having an opinion. It means being above the fray. It means being free to express your opinion without fear of political consequences. See, the government officials who are elected, they're beholden to the voters. So maybe they think something is bad, but the voters think it's good. So they just do what the voters want because they want to get reelected. The point about having an independent Fed is that these guys don't have to care what the voters want because they don't need their votes. They're supposed to be able to do the right thing, even if the voters don't know what that is. Even if the voters want to do the wrong thing, they're supposed to be the adults in the room to say, no, what you want is wrong. And here's why, right? If these guys really are so smart, right, if they're smarter than the public, well, why can't they educate the public? If they're smarter than the congressman, then educate them. Let them know, hey, you guys are considering something and it's bad. And here's why it's bad, right? But no, they're afraid to speak up. Powell is afraid to do his job, right? So, he just wants to pretend that his job is to remain silent because that's how you remain apolitical. No, your job is to criticize bad policy. That's how you remain apolitical because you're not beholden to the voters. You don't care about popular opinion, right? You just do what's right. But that's not what they do. They just do what's politically expedient and they pretend that they're doing what's right. Let me see what else. So, yeah, he said he doesn't want to criticize tariffs. He doesn't want to praise them. He just wants to stay neutral, right? Well, what the hell is that, right? What do we need neutrality for? We need advice. We need the people who we put in those positions to let us know if they think we're doing something wrong. Anyway, about the restrictive policy, he said that he did not think policy was significantly restrictive. He said it was meaningfully restrictive. Whatever the distinction is between that difference, I'm not really sure. But I think it is an acknowledgement that policy is actually not as restrictive as they've been claiming because it's only meaningfully and not significantly. But I don't think it's restrictive at all. I think it's still loose. Monetary policy has remained loose. Interest rates are still too low. You can tell by the record amounts of debt and borrowing that have not been deterred at all by the increase in rates because it's been too little. Rates have not moved up enough to be restrictive, and that's why you still have all this borrowing because it's still cheap to borrow. In fact, the money supply growth continues. We got the most recent data on the money supply, and money supply for the final week or December, the month of December, was up by 85 billion. So money supply didn't go down. Annualize it, it was a 0.4% increase. That annualizes to 5% money supply growth. That's 5% inflation because that's what inflation is. It's the expansion of the money supply. So we got 5% inflation rate. I mean, that's pretty easy. That's a lot of inflation for all of last year, because this was a December number. For all of 2024, the money supply grew, M2 money supply, by 4%. So if you're supposedly being restrictive and fighting inflation, why are you creating 4% inflation? Why are you inflating the money supply by 4%? If your goal is prices going up 2%, why do you have the money supply going up 4%? Unless you think that prices would have dropped 2% absent that inflation. And so you need to create 4% inflation to offset the 2% natural deflation. But to me, this is all proof that we have an easy money policy, even if it's less easy than it was in prior years. In aggregate, it's still easy. And that's why inflation hasn't gone away. In fact, it didn't even go into hibernation. We still have pretty substantial price increases, but the increases that we're about to see in 2025 are going to be much greater than the ones that we've seen in 2024. And, you know, Trump is already getting ahead of the curve. I read that Donald Trump is already criticizing this Fed decision and claiming that it's going to cause inflation. So now he wants to blame the inflation on the Fed for not cutting rates enough. Now, of course, the Fed is responsible for inflation, but for the opposite reason that Trump believes, or at least based on that most recent quote.